Welcome to week 2 of Business Finance 330 Online. This is Professor Hasse speaking to you live and in color from Claremont, California. And as we begin this week 2, some of us have already had their professor meetings with me last evening. It went very well, and I appreciate you all taking the time out to talk to me. We have our second round of meetings a week from Monday, and if you have not yet signed up for a professor meeting, please do so as soon as possible. Our topic this week is financial statements. What happened? Financial statements help the financial manager understand where the company has been and where they are going with their financial performance. Chapter 3 is a review of basically an accounting class. What are the financial statements? The balance sheet, the income statement, and the statement of cash flow. Chapter 4 is financial statement analysis. I want you to concentrate on page 105 of the text, and I have given that page in the review notes for this week. It gives all the leading indicators of financial analysis, of which you're going to be trying and testing out and assessing in your assignment this week, which is now posted to Blackboard and is due on Sunday. And we'll talk about that in just a minute. So we have a lot to get going. We have this video today. Today is Tuesday, November 1st, a little late this week. And then we have another video this coming Friday talking a little bit more about financial statement measurement. Okay, so let's take a look at where we stand right now in our Blackboard. Okay, so as we begin week 2, some of you should start seeing a grade in your report card section of Blackboard. If you've completed your bio and completed and submitting your completed portfolio, you will have a grade in that. If you have no grade in your grade report, that means you have still an open item in your week 1 portfolio. Please refer to the discussion post for my review of your work. And if you have to make some adjustments or clean it up, please do so I can post a grade to that assignment for this week. You also get a grade for participating in the professor meeting. And if you've done that, you've also gotten a grade there. And then we will have a third grade posted next week with our assignment number 1 work. So we're beginning to attract grades. And so here's where we stand currently in class. If I go to the course syllabus schedule and information, we now are in assignment 1 due this Sunday, November 6th, which is 5% of your course grade. And then as you can see, the rest of the schedule going forward. But for the short term, you have assignment number 1 to do this week. If you go to the assignments section, you'll see the assignment. It's in 2 formats, a PDF version, a PDF version and a Word doc version. You can use either formats, the same assignment. It's a series of 11 questions, some multiple choice, some short answer, and some doing some research. I'd like you to select one company from your portfolio and do some quick and dirty financial analysis of that company. And I'll talk more about that in a minute. So again, this is the procedure. You just open up, download one of these 2 files, do your work on the file, or submit your own file if you'd like, and then repost it back to this file folder. What you do is you click on the file heading, assignment number 1, Introduction to Finance, and you'll go to an upload file. You go to Browse My Local Files, and you find your file on your flash drive or on your desktop or in your computer. Click on that file and hit Open, and then that file is uploaded into Blackboard. Then you must hit Submit. Once you hit Submit, I have the file. Now, Blackboard doesn't give you any indication that the file has been uploaded properly or not. Do not worry about that. If I see some trouble in your uploading of your file, I will let you know. But again, make sure you have your name on your file folder that you submit so I know who you are, and go ahead and then submit that file folder. All work is to be submitted in Blackboard. All work should be in a digital file, not a JPG picture of some work that you've done on your desk and take a picture of it on your cell phone and then send me that picture. No, 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 no. All digital work file is to be posted. That can be in Word doc, it can be in Excel, it can be in PDF, it can be in numbers, whatever, but it's got to be a digital file. This is November 2022. We now use everything digital in submitting our work in the online platform. Again, if you have difficulties with that, let me know and I will help you. All right, very good. So, and then once you hit submit, the file is uploaded. Now I can grade it and I'll resubmit it back to you when I do the grade at the beginning of next week. So that's the procedure for assignment. Again, if you have difficulty, if you think you did something wrong, don't worry about it. It's okay. Now also, and I'm mentioning this to all the student meetings that we're having, if you need some extra time, but beyond midnight of Sunday, November 6th, you can get an extension and extra time. It will not affect your grade whatsoever. All you need to do is send me an email, send me a text, post to the discussion forum, and just let me know. Mr. Hassey, I need another day. I need another 2 days. I will post it on this date. Do that, no problem. But you need to do that because I have to turn off the due date blocker on Blackboard. Right now, Blackboard is set to not accept any files after midnight Sunday. So if you go in on Monday and submit your work, it won't let you do that. So that's why you have to let me know you're doing that so I can unblock that midnight deadline and give you access to upload your file at any time you wish. So just remember that, and please let me know. And no problem. I encourage you to do the prop work correctly, not rush around like a madman and not do a good job on your assessed work. Assignment number 1. Here is assignment number 1. It's a series of questions, and I give you the points that are going to be graded on these questions. You can either download the version and just do your answers right in the same file folder, or you could do it on a separate digital file, answer the questions. Just simple definitions. What are the goals of financial management? What are the functions of financial markets? What are the 2 major decisions that are made by financial managers? And then additional questions, multiple choice, and I give you the specific chapter that the question represents. Then we get to question 7, where I need to see 3 numbers. I need to see, based on this information provided, what is the earnings before interest and taxes of this company? What is the net income of this company? And what is the cash flow from operations? If you watch our lecture video this week, today and next Friday, I explain all these statements for you to do this problem. It's a little refresher course back to our old accounting days. Then I want you to define some terms from chapter 4, define some terms from chapter 3, and then go to your portfolio and select one company only, and go in and find for the last 3 fiscal years of your company, what is the earnings per share? The earnings per share for the last 3 years of one company in your portfolio. I want you to do 2 things to properly answer the problem and get full credit. List the 3 years earnings per share and what was the date of those fiscal years. Give a brief paragraph explanation of your interpretation of how those earnings per shares have changed over the 3 years. Remember, this is covering the pandemic area. And then finally, tell me where you got the information. Did you go to the company's website? Did you go to Yahoo Finance? Did you go to Google? Where did you get the information for the earnings per share for the last 3 years? Those are all sources that you can find this information. So it's a little internet and research work. And then finally, in question 11, with the same company you selected in question 10, please find for the last 2 fiscal years the current ratio of the company, the debt ratio of the company, the profit margin of the company, and write a brief 1 or 2 sentence comment on what they represent as an analysis to the company. What is the current ratio represent? What does the debt ratio tell us? What is the profit margin? Don't forget to write that explanation or you won't get full 15-point credit. Okay, so there's some internet work, some definition work, some accounting calculation work, and some definitions. That's what assignment number 1 is, due Sunday, November 6th, but extensions are available. Okay, so this is week 2 file folder. There's our learning assignments for this week. There's you click on the file folder in week 2. There's our agenda that you saw at the beginning of our video that highlight the key things of the week. Here's a portfolio sample spreadsheet. This is my portfolio in Excel format of week 1. So what you want to do is you can download that and see what my stocks I'm invested in and how I put together my portfolio. As an example, might be helpful going forward in the course. Then I give you some lecture notes. Financial statement analysis. This is page 105 of the textbook, and we'll take a look at that in just a minute, and gives you some key indicators of financial statement analysis. And then a spreadsheet, which I'll be reviewing a little bit in this lecture, but mainly on Friday, which highlight the big 3 financial statements: the balance sheet, the income statement, and the statement of cash flows. Most of you probably already know all about those, but this, for some of you, have been a while since you've taken accounting. This is a good refresher to the key financial statements that tell the financial manager how the company has done. Remember, financial statements are what happened, the past. That's accounting, what has happened. Financial management is, okay, what do we do with that information and go forward? What's our strategy going to be into the future for our business? So we'll take a look at that. Then there's some interesting enough definition. Our financial fact this week is a definition of the Dow Jones Industrial Index. This might be of help to some of you understanding the 3 indexes that we are putting into our portfolio. Last week, it was the S&P 500. Next week, it's the NASDAQ index. Then the PowerPoints and explanations of our chapters, some additional videos, if you might want it to, as a refresher to some of this financial statement information. Again, notes about chapter 4 and the PowerPoint, and some videos about explaining earnings per share, price earnings ratio, and financial statement analysis. Some great videos to update you on these key definitions of chapters 3 and 4. Speaking of videos, let's take a very quick video look at the definition of financial statements.
We are going to discuss 3 common financial statements: the income statement, the balance sheet, and the cash flow statement. Are you familiar with these documents and why they matter to you? If you own your own business or even run a division of a business, it is imperative that you understand these statements because they tell you about the general financial health of the company. Also, if you have ever invested or considered investing in a company, whether through the purchase of stock or through a loan, you'll want to understand the company's financial health. In this program, we will explain each of these 3 statements and what their purpose is, how to read them, and how they can be applied in a real-world setting. So why is it important to understand all 3 financial statements? Basically, each one tells only part of the story. They are somewhat like pieces of a puzzle, and you need all 3 pieces to see the big picture. Let's begin by reviewing the general purpose of each financial statement and what distinguishes one statement from another. Simply put, the income statement tells you whether or not the company is profitable during a given period, usually monthly, quarterly, or annually. It may be helpful to think of an income statement in terms of a video camera. At the start of a period being measured, you hit the record button and the camera starts recording everything that takes place until you press stop. Similarly, an income statement indicates how a company is performing over an extended period of time. Knowing whether your company was profitable over a period of time does not necessarily tell you how much money the company has right now. That's what the balance sheet is for. In contrast to the income statement that records transactions in time like a video camera, the balance sheet is like a still camera, showing the company's financial state at a given moment. It provides a snapshot in time that can be used to determine how much the company currently has, how much it owes, and what is left for the owners. The cash flow statement is based on numbers from your income statement and balance sheet, and is like looking at your own checking account. It shows you what the company did to generate cash and how it used cash during a given period of time, often monthly, quarterly, or annually, like the income statement. Thus it answers two questions. Where is my cash coming from, and where is my cash going? Remember, while each statement has a different purpose, all three are necessary in helping us understand a company's complete financial story. For example, if you want to know whether or not a company is profitable, the income statement is what you need. Even though you know the company is profitable, if you want to know how much money the company has available right now that you can spend, you want to look at the balance sheet. And regardless of profitability and current available cash, if you want to know where cash came from and where it went, you look at the cash flow statement. Each document fills in a piece of the puzzle to complete your understanding.
In our week 2 Blackboard in-class review file folder, there is this spreadsheet. It's for the Reggie Dunlop Incorporated. It's a spreadsheet file of their financial statements for the years ending December 31st, 2020 and 21. And this highlights all the information of Chapter 3 and Chapter 4. You might want to study this. I'm going to go over it in a little bit more detail in my Friday update video, but you can get a head start on it. Remember, the financials in finance provide a historical review of the company. Are they maximizing value? Are they making money? Do they have much debt? How's their cash flow? Also, it provides data for future planning and financial management. We take this information of what happened and apply it into the future. And there's 3 financial statements. The balance sheet, which is a statement of assets, what we own, and how did we fund them? Debt, liabilities, and equity. Equity being made up of the value of common stock that has been booked and issued by the company to their investors, and retained earnings. Retained earnings is the accumulative profits less the dividends paid out to shareholders over the life of the company. That's equity. The income statement, which is for a period of time, in this case, 1 year. Sales, expenses, earnings before interest and taxes, less the interest rate on debt, earnings before taxes. The tax rate, taxes you pay, less the net income of the company. As you can see, this company, Reggie Dunlop Incorporated, lost $95,000 in 2020. Then they made $253,584 in 2021. I bet they're happy about that. Also given is the amount of shares of common stock outstanding of this company. In 2020, they had 100,000 shares of stock outstanding, in other words, owned by the public. And as you can see at the end of 2021, they've issued now 250,000 shares of stock. So it looks like in 2021, this company got some capital by issuing 150,000 more shares of stock. And you can see that in the common stock line of the balance sheet. It went from $460,000 to $1,680,000. That's a delta, a change of $1,220,000. So they increased their equity position in 2021 by issuing to the market 150,000 shares of stock and got cash $1,220,000. We'll see that in the cash flow statement. So the net income is also a way of determining dividends. As you can see here, the company paid dividends to their shareholders in 2021 of 22 cents a share. If I take 22 cents a share times the number of shares of stock, I get $55,000. So they paid out of that $253,584, $55,000 to the shareholders of record at the end of 2021. I'm sure they like that. Thus, the net difference between profit, $253,584, and dividends paid out of $55,000 is $198,584. And as you can see, that's the overall change in the retained earnings balance for 2021. If any of you remember your accounting days when you had to do the closing entries to close the books for a period, an accounting cycle or an accounting period, all the revenue, expense, and dividends were all closed to the retained earnings account. It accumulates over the life of the company. So at the end of 2021, this company had $296,216 in accumulated retained earnings since day one of this business. Balance sheet, income statement. That all leads into the cash flow statement. The cash flow statement is broken into three sections: cash flow from operations, cash flow from financing, cash flow from investing. Cash coming in, cash going out. Cash coming in, cash going out. Cash going out. The net effect of these three areas of the cash flow statement should equal the delta in the cash position of the company on the balance sheet. Notice the net of this is $6,718. If I go to the balance sheet, and golly, the cash and cash equivalents line on the balance sheet have increased from 2020 to 2021, $6,718. The cash flow statement tells us where the money came in and where did it go out for the company. As far as a financial manager or a corporate financial representative, CFO, the cash flow statement is the most important statement. It tells us where money is coming in, net income, depreciation, accounts payable, accruals. Where is money going out? Accounts receivable, inventory. Wait a minute, Mr. Hassey. Accounts receivable is collection of money. How can that be a negative cash flow? Well, if you look at the balance sheet, the accounts receivable went from $632,160 to $878,000. That's a delta of $245,840. Just so happens that amount is on the cash flow statement. What does that mean? Well, if the receivables went up, that means we sold our products and services and have yet collect the money, collect the cash. Negative cash flow. Same thing with inventory. Inventory was at $1.3 million in 2020. It's at $1.7 million in 2021. And delta of $429,000. Inventory went up $429,000. Now, how did that inventory go up? We either produced it, manufactured it, or purchased it from a vendor, and we have yet to sell it. It's sitting on our shelves or in our warehouse. So we've expended the cash for inventory and have yet to sell it. Thus the delta and thus the negative cash flow. That's how that works. Same thing for accounts payable and accruals. We borrowed more money. We owe more money in accounts payable. We owe more money in accruals. That means cash that we didn't have to pay out yet. We will probably within the next 30 days, but on December 31st, we still owe the money, but we've been offered services for that money that we haven't paid yet. Positive cash flow. In financing, notes payable, bonds. When we borrow money, if our borrowing position goes down, if our debt position goes down, that means we paid off the debt. Negative cash flow. If our stock position increases, like we just talked about, if we issue more stock and receive the cash, that's cash coming in, positive cash flow. And if we pay out a dividend of $55,000 to our investor, that's financing going out to our investors, negative cash flow. So we're paying off debt here and we're receiving additional capital or cash from the issuance of more stock, financial cash flow. And then we have the investing section where we invest in assets or sell off assets. Well, this particular period of time, we invested in assets. Short-term investments went up $51,632. Fixed assets went up $17,050. That means we purchased additional physical fixed assets and investments. That's cash going out. The net effect of all this, $6,718. Cash flow from operations, short-term working capital management, cash flow from financing, paying off existing debt, borrowing money, issuing stock, paying dividends. Cash flow from investing in long-term assets that will pay off to the company over time by additional revenue in either investment income or cash flow from new assets creating new products and new services. The cash flow statement, huge. And the final tab is statement analysis. These 6 you need to be familiar with: current ratio, debt ratio, profit margin on sales, return on total assets, price earnings ratio, and earnings per share. Those are very important. You need to know those from chapter 4. And here's that key page. This is in your review notes in week 2 file folder. Here are the key indicators taken out of page 105, or page 120, of the textbook. But here's some of those definitions and the formulas to get that information. This is a good study guide for the assignment and for those definitions, and you can practice them in this spreadsheet that I'm showing you here. I will go over this particular part of the spreadsheet, financial statement analysis, in my Friday video of this week, but you have it. You can see the calculations taken from the Reggie Dunlop financials, and I blocked out 2021 because that's going to be the subject of my discussions on Friday. But you can unblock those very easily by just going up here and wiping them out this way. But you guys know how to do that. Okay, so that's the review video. The review spreadsheet for our work for chapter 3 and 4 gives us definitions of the 3 key financial statements and what they represent. The key to financial management and business finance is to understand where are we now with the company. We can't make any decisions unless we know what's going on in the company. If we're going to invest in the company, if we're going to work for the company, if we're going to be doing business with the company, where do they stand financially? So I want you to pick one company from your portfolio in your assignment 1 and find out some information about that company as part of the assessment. So if you have not selected a date, now you're looking at, let's go to the discussion forum. We're now looking at dates in next Monday, November 7th. I have some times available. If you have not made a date or a appointment for me to talk to me next Monday, please do so, that you will be getting some grades for this. It's 5% of your course grade. It's an easy 100 points. You just show up and talk with me for 5-10 minutes. So please do that. If you have any adjustments to your portfolio per my review, please post those to week number 1 and clean that up so I can post a grade for you. And this week we have assignment number 1 as your work to do for Sunday. And we'll talk more about this assignment in my review video this coming Friday. So that's where we stand, everybody. Have a great week. You know how to get a hold of me if you have questions. And until Friday, adios.